if I learn to read the price action, if I learn to use this price action strategy, am I going to be able to use it in different markets as well? On this channel, I teach you guys how to find high probability setups. What is a high probability setup? Well, high probability setup is as simple as a two-legged pullback second entry at the key entry point. It comes down to human psychology. If humans attempt to do something once, they won't give up. They will try to do it again. It is simple, it's not complicated, but it works. If you enter on a second entry with the direction of a trend at the proper key entry point is a place where confluence appears and the setup is strong, that will generate a high probability setup. But does this strategy work in all structures, time frames, and markets? Or can you learn and apply this skill on any market you want? And this is what we're going to talk about in this video. So we're looking at the NQ Nasdaq 1 minute time frame. And as traders, we know that we're looking for second entries with the direction of a trend. And we're looking for key entry points. So as the EMA is pointing down, I see a downtrend. So only thing I have in mind is a high probability setup is going to be two-legged pullback to key entry point. And price is working lower. There's the first leg, pullback, second leg, two-legged pullback to the exponential moving average, and this set up the trend line, high probability setup. There's the first entry long, pullback, second entry long, but the trend is down, so any second entry to buy is most likely going to fail and thus create a high probability setup. Downtrend still continues. I'm resetting the count. First entry short, second entry short, looking for high probability setups with the direction of a trend. Second entry short, not touching the EMA, not at the key entry point, still inside of this channel, followed by a break, new extreme indicating that the uptrend played out, and there's a double trap entry at the exponential moving average. High probability setup, trend line got confirmed, EMA is holding price, lower high, confluence of two key entry points in a downtrend, market reversed, uptrend followed by a break, new extreme, which indicates that the uptrend played out, first entry long, pullback, second entry long, failure. We're not looking to go long because uptrend played out, high probability setup, failure, lower high coming off double top, and a failed second entry long again because the bearish momentum is strong, indicated by push below the exponential moving average. Market continues pushing lower, resetting the count here. Only thing that I'm looking for is a high probability setup. Two-legged pullback is that simple. First entry short, second entry short, but far away from EMA. I cannot take this. New low right here, first entry short, pullback, second entry short, confluence of two key entry points, trend line, and the exponential moving average generates a high probability setup. New high, first entry long, pullback, second entry long, failure. This is the Nasdaq 1 minute time frame, and price action still remains completely perfect. It depicts human behavior. And what about crypto? Can I use it on Bitcoin as well? Well, let's take a look. This is a Bitcoin and daily time frame. The uptrend started after this move right here. So I'm already going to use the geometrical structure to help me find the trend line, and I can also find it off the highs. I'm just going to copy it, put it at the bottom. I see an uptrend, so the only thing that I'm looking for is a high probability setup, which will be two-legged pullback at the key entry point. I have a new high, first entry long, pullback, second entry long, horrible signal bar, pass. I'm waiting, new low, higher low, confirmed two-legged pullback, key entry point, exponential moving average is holding, giving me a good indication that this is going to generate a bullish move. Market pushed higher, new high, resetting the count, first entry long, second entry long, far away from exponential moving average. I'm not touching the exponential moving average. I'm not interested. Market pushed lower, created a horrible doji bar below EMA, not interested, and gave you a nice bullish bar coming off the key entry point, and you closed above the exponential moving average. Confluence of two key entry points. Market pushed higher, new high, first entry long, pullback, second entry long, big bullish bar, EMA holds price. I'm still expecting a second leg to a new extreme. Price action works like clockwork. Uptrend played out, so I'm expecting correction or straight up reversal. Drawing these trend lines, I have an uptrend, I have a break, attempt to create new extreme, micro double top, holds price, big bearish bar. I have a new low, first entry short, second entry short, above this multiple tops resistance, failed breakout, nice bearish bar, high probability setup, two-legged pullback up. We still need a new extreme to be formed, and market formed a new extreme following the trendline rules. I have a new low, first entry short, second entry short, a little bit risky because we just had a new extreme, but if you wait, new high, first entry long, pullback, second entry long, indicated by the EMA rejecting the price that you want to bet that the price will sell off from this point on and market reverse lower. Market reversed higher, new low, first entry short, pullback, second entry short, failure. Second entry short is going to fail because the downtrend played out, indicated by a break and a new extreme form. Strong push above EMA is indicating the bullish momentum, and I have a nice reversal pattern. Exponential moving average is holding. As the price is working an uptrend, I'm looking for second entry long with the direction of a trend. New high, first entry long, pullback, second entry long. At the two key entry points, new extreme, resetting the count, looking for the same simple setups. First entry long, pullback, second entry long. There was actually a little second entry long right here. Your stop loss goes one tick below the signal bar, so you're still safe. Confluence of two key entry points, big bullish bar, and then you have a higher low setup. Break of a spike in a channel, expecting new extreme, perfect price action. You're expecting correction or straight up reversal. Market continues in uptrend. First entry long, pullback, second entry long, two-legged pullback, where key entry point, exponential moving average, new low, first entry short, second entry short, failure. Uptrend is now in effect, so any second entry is going to fail and any second entry is most likely going to work. That's the basis of strategy, and market is reversing lower. We're looking at Apple weekly time frame. Uptrend is in effect, spike and the channel pattern. Only thing that's going to be interesting is a high probability setup at the key entry point. I'm using the exponential moving average as a key entry point. I'm using the trend line as a key entry point, and I'm looking for a two-legged pullback. New extreme is formed, so I'm resetting the count. First entry long, second entry long, exponential moving average keeps holding, indicating me that the key entry point is holding. New low was formed right here. First entry short, second entry short, failure. Any attempt to sell is most likely going to fail. Any second entry, because this is an uptrend. New high is formed, resetting the count. First entry long, pullback, second entry long. Horrible signal bar. High low has a nice bullish bar. Confirmed this key entry point. Nice bullish momentum, and I have a new high, first entry long, pullback, second entry long, of confluence of two key entry points in a bullish structure. I'm not overthinking this. Two-legged pullback at the key entry point is a high probability setup. New high, only a first entry, more aggressive one, but since two key entry points are holding in a strictly bullish structure, I can take this entry. Now, am I using this strategy for long-term investments? To be honest with you, I'm not. I'm just dollar cost averaging every single month. I don't even think about it. Just the way I pay my taxes every single month, I just put a very small portion of my money into the long-term investments and I let it run for 20 years. I don't even touch it. But you know, you can use this even on weekly time frames. Guys, I just showed you that the price action is simple. It represents a human behavior and it works in all time frames and in all markets. You want to spend your time studying the one time frame and one market and mastering it, because every time frame and every market has a different tendencies and you want to become a master of one single market. Don't overcomplicate it. You guys can see that the easy price action, second entry two-legged pullback is a high probability setup. EMA is holding price nicely. Key entry points are holding nice pricely. You're looking for confluences, and if you learn to master price action, you have a skill that will be worthwhile long in the future. So take care, everybody.